So to show you how that will make me a millionaire then by the time I'm 50. What's up, money making enthusiast? In this video, I'm going to share with you my exact investment strategy on how I plan to become a millionaire by my 50th birthday and a multi-millionaire by my 60th birthday. Hey, welcome back to the channel. My name's Chris, and on here I like talking about how to make money online as well as being smarter with your money. If you're wondering why my hair's so short now, yes, it's because my girlfriend hacked away at it while I was doing a live stream here on YouTube to help raise money for Cancer Research UK, which now on my Just Giving page has raised over £200 towards my £1 million target by my 40th birthday. I know this video isn't quite what you're used to seeing on the channel. I know normally I'm talking about how to beat the bookmakers and how to make profits each month through match betting, but I wanted to also give you some insight into what I'm planning on investing match betting profits that I've made into in order to grow that money over time. When I first started making money with match betting, I was wasting the money and wasting the profits on things like renting supercars, booking nice holidays, going and staying in nice hotels. And really after a bit, it gets a bit, the same. And I just wanted to focus on something now for the future, which is building that wealth and building the money that I'm earning rather than just throwing it away on renting cars and stuff like that. But getting into the video then, I've got a few things I want to cover. So we're going to look at what trading platforms I'm going to be using to build this millions of pounds invested, what I'm investing in, and then I'm also going to show you the compound interest calculator at the end to show you just how that money grows and gets bigger and bigger each year. So getting on the laptop then, the first thing I want to share with you is my Hargreaves Lansdown account. So this is an account that I've just opened. Now you can get one of these lifetime ISAs if you're between the age of 18 and 39. And basically every tax year, which of course runs from the 6th of April to the 5th of April the following year, every time you top up, you can put a maximum of £4,000 in. So as you can see on my H&L account here, for this tax year, I've put £4,000 in. It's given away there what I've put the money in already, which I wanted to talk about later in the video. But yeah, I've put £4,000 in that, and I've done that because every tax year you put that £4,000 in, the government are going to give you £1,000 as an extra bonus for completely free. That means in a couple of weeks, when the new tax year comes around, I can put another £4,000 in and they'll give me another £1,000. So I'm essentially, in 2 weeks, I'm putting £8,000 of my own money, and then the wonderful tax man, which I know he isn't normally called wonderful, is going to give me £2,000 to make it a £10,000 investment. With these lifetime ISAs, once you put the money in there, you can't take it out. Well, you can take it out, but you will get charged a 25% fee on any money that you withdraw. So it's advised if you're going to go for one of these, it's best to put the money in there and then just forget about it. Don't think of it as even money that you have anymore. And you can pay into this until your 50th birthday. Then when you turn 50, you can't pay any more in. You won't receive any more bonuses. But what will happen between your 50th and 60th birthday is you'll just be earning money each year for those 10 years, and that will just build and build. So whatever you've paid into it by the time you're 50, including the bonus from the government, 50 to 60, you'll just be earning tons of extra income from it, including the dividends that are being paid out from the companies. I am planning on doing a completely separate video all about lifetime ISAs, which is going to be, giving you information on the different kinds of lifetime ISAs, the funds that you can choose to invest in and all that. Much more detailed information, as well as the fees, how much it costs and all that. But for this one, it's, as you can see on the screen, I've got it set up because you don't have to have these where you put the money in and then it's invested. You can just have them as a cash ISA and still get the bonus, but it's not invested in anything. But with mine, I've put it in the Vanguard FTSE100 index. And then as you can see there, it says accumulation, which basically means anytime that the companies that are on that index, anytime they pay out dividends, instead of those dividends getting paid back to me as a cash income, they'll actually be reinvested into that account and actually just build the account more and more. And I've set that as accumulation because I want it to just grow over time. It's obviously it's not money that I'm going to touch, so that's why it's set up like that. Before I get into the next trading platform that I'm using, which is actually an app on your phone, some of the subscribers of the channel will have already seen me put up a video that I did last week where it showed you how to get a free share with that app. But what I want to talk about before I get into that is what the index is that I've invested in on the app and sort of why I've invested in it, why I've gone for this one and why I haven't gone for... So there's two that I'm looking at. And basically, I was first looking at the, so if we go over to here, firstly, I was looking at the S&P 500. But the reason why I didn't go with the S&P 500 is because, as you can see here, that's on the 10-year graph. If we go to the 5-year graph, then that'll just show us, so not actually 5 years, 3 years. So this will show that how it grows. And the S&P 500, for those of you that don't know, it's just the top 500 companies in the US. The FTSE 100 is the top 100 companies in the UK. I know that's obvious to some people, but if you're sort of brand new to the world of investing and like building your wealth over time, which is what I'm going to be focusing on the channel, I'm not going to be focusing on anything to do with day trading and trying to get rich quick or anything like that.
From here, bro, what you mean, bro? Look, it's money going up, bro. We only going up,
I don't even know what that is.
I have an article on the Profit Boss website actually about how I did try doing that and how it didn't work out. I lost quite a bit of money, and I'm also going to be doing a video detailing exactly how I lost that money in future as well. But just to get back to this, the S&P 500, it always grows gradually. But as you can see here, when the pandemic started last year, there was obviously a huge drop, and it dropped right down to, $34.80 there. And then since it started recovering and coming back up, it's now at an all-time high. So I thought, rather than get into the S&P 500 now when it's right at the top, possibly, I know some people say don't try and time the market, don't wait for the dips to come down and then get into it. But I just strongly think that, why would I get in there when I could just potentially wait, see if there's a bit of a drop like that, and then get into it? Because I think sometimes you need a bit of patience from it, and this isn't any kind of financial advice. I'm not a professional. I'm not claiming to be any kind of professional at investing, but that's just my opinion on it. Why would I want to get in there when I could just hope that it's going to drop down a bit and then get into it? So if I'm not getting into the S&P 500 now, as you've already seen on the H&L website that I've put my lifetime ISA into, I'm in the Vanguard FTSE 100 there, in the accumulating index there. And that's because, so if we look at this graph here, and this is actually, so the Invesco FTSE 100 UCITS ETF accumulating version of it, this is the one that I'm 16 shares into this with £1,000 of my own money deposited into the Freetrade app, which for those of you that are interested in sort of doing this and following along with, maybe you want to sort of copy what I'm doing, you might think it's a good idea, then I have got a guide over on the Profit Boss website of how you can get set up on Freetrade and also earn a free share with that as well. Of course, links in the description for that. But what I wanted to sort of show you here, why I've gone for this Invesco FTSE 100 is, as you can see, from, over the years, it's been growing gradually, just like the S&P 500. Like I said, this is the top 100 UK companies. And then here again, just like the S&P 500, it dropped massively, when the COVID-19 pandemic came, it dropped hugely right there. And then it's been recovering, coming back up, a bit of a dip, and then it's been coming back up. But unlike the S&P 500, which has continued to go up and just keep going and has recovered way past it, the FTSE 100, I think because of everything that's been going on with Brexit, of course, and stuff like that, hasn't quite recovered to the point where it's gone past and above what it was before. So like with many things that sort of come out in America first, like your movies and stuff like that, everything comes out in America first and then the rest of the world follows. So if that same trend happens here with the FTSE 100, then I've got in sort of halfway in between the pandemic's lowest rock bottom price and also the price at what it was before the pandemic hit. So a nice kind of halfway point. And from now on, it should hopefully, obviously no one can predict these things, but hopefully it should then follow the S&P 500 and continue to grow past that and recover past what it was at the point before the pandemic. The Invesco FTSE100 UCITS ETF, just like the Vanguard FTSE100 that I'm on with H&L, the one I'm on with Freetrade is also one that says it does not pay out the dividends, but instead reinvest them to grow your capital. And the reason why that's so important is because you don't want those dividends just being paid out to you. You want them to be reinvested if this is a long-term wealth building strategy that you're going for. So now I've shared with you which investment platforms I'm going to be using, which kind of ISAs I'm going to be using. So of course the lifetime ISA over on Hargreaves Lansdown, and then the regular stocks and shares ISA over on the Freetrade app. So I will be able to put £4,000 of my own money into the Hargreaves and Lansdown lifetime ISA. And then because you're allowed £20,000 a year as a max for an ISA, I'll also be able to put £16,000 into the Freetrade app each year. Add on top of that the government £1,000 up to my 50th birthday, and it's not just 20,000, I'll actually have £21,000 every year invested. The aim with the Profit Boss channel is of course to help as many people as I can do exactly the same thing, get smarter with your money and make more money in order to then be more financially free in the future. That's a hot word everyone uses, financial freedom. But enough of that, let me show you here on this website that I've found. It's just a basic calculator, but it shows you how interest compounds for your investments. Ignore the dollar signs, we're not working in dollars here. We're going to pretend that that's a pound sign. The way this works is you just put in your initial deposit. So I've put 6,000 in there because I've put 4,000 in the lifetime ISA as I've shown you. Then I'll get 1,000 from the government. And then I've also put 1,000 into the Freetrade app as well. So that's £6,000 there as my initial deposit. Then you put in your recurring contribution, and you can change that between monthly and annually. I've put it annually just to keep things simple. And that for me will be £21,000 a year because of 20,000 being my own, and then of course the 1,000 from the government. So 21,000 a year. Then estimated rate of return. So the FTSE 100, that sort of averaged a return over the years of, it's supposed to get like 10%. It's averaged a bit lower of 5.7% in recent years, but they say a safe sort of estimate would be 7.75%. And then the S&P 500 also averages, historically 10% per year. So I just thought put it at the low side of things, or in the middle there of 7.75. And that's kind of like what you could sort of expect to happen. You could put 10% in there, but I just thought go with 7.75. Then the compound frequency is the sort of amount of times that it's going to compound. So again, I'll just put annually there. Then because I'm 32 years old and this is to my 50th birthday, I've put 18 years as a time span. So as we can see here, it says in 18 years, you'll have £790,582. And they're even congratulating you with way to go there. And the numbers there in green are, of course, the money that you're putting in, so the principal numbers. And then the interest there that's the amount of interest that it's growing by. So as you can see, because each year that amount grows, because there's more money in there, of course you're going to earn more money because you've then got more money. And that's obviously compound interest. I know this is super basic to some people, but for those of you that sort of don't know that, you can see that you're only putting a small amount in each year yourself, but that extra compound interest is just growing massively each time. Now, I know I said the goal with this was to be a millionaire by my 50th birthday, but what you've got to remember is, like with the Freetrade investments that I've got and the Hargreaves Lansdown, I've got those investments set to accumulate. So this graph hasn't actually included any of the dividends that are going to be paid out. And of course, as those grow and get bigger, each year there'll be more and more dividends. So I would estimate that number to be, I can't say exactly what it would be. I couldn't find a calculator that includes exact dividends. I think that'd be impossible, I think, to work out. But just from my sort of rough calculations, I would say that will be around £1 million. Please do comment below if you think I'm wrong with that, or if you think it could be way more than $1 million. It might be 1.2 million. I'd love to hear your input on that. And then if we change that time span, instead of 18, we put it to 28. So that would be my 60th birthday. As you can see, it would say in 28 years, you will have £1,968,336. And again, with the dividends being paid out back to that, Well, you can just imagine once you get into these much higher numbers here. So that one there is over £1 million there. You can imagine the dividends that you would be getting there would be insanely big. And that would literally mean that by my 60th birthday, I would have over £2 million sat in a bank account just earning me interest each month. So I hope that's explained to you my exact plan on how I plan to become a millionaire by my 50th birthday. As I say, I've got lots of content planned coming up on the channel to do with investing and all that stuff. And no, I'm not claiming to be any kind of professional investor. I'm not, but I am learning more and more. And this is just the first thing I've learned about compound interest, how it works, and how it can really, really increase your amount of wealth in the future. As usual, if you've enjoyed this video and you found it helpful, please do press the like button below. It really helps the channel out with growing. And until next time, thank you very much for watching, and I'll see you in the next one.